That's really where I think our edge lies, is in kind of finding the emerging narratives. And fundamentals are part of that, right? Like long-term fundamentals can be part of that story and help you underwrite something over a multi-year time frame.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Phil, thank you so much for joining me today. Super excited to chat with you. All right, Phil, you're the managing partner and CIO of Plaintext Capital, a liquid digital asset fund. You guys manage over 30 million in AUM, focused primarily on liquid tokens. Previously, you were at Masari, Ikigai Asset Management, and Grayscale. All right, so Phil, what caused you to decide, like, what was the deciding factor where you're like, okay, I need to start my own firm? Because, really, really deep crypto experience. Masari, I think you were a research analyst there. Ikigai on the investment team, Grayscale, same thing. So at what point were you like, all right, enough's enough. I want to start my own firm?
Yeah. Like you mentioned, I had kind of had this journey through different roles. In 2018, worked at Masari, and there, I don't know if you remember this, like it was kind of a research analyst program. And so I was in kind of that rotation. A lot of great people that I still keep in touch with and went on to a lot of great positions, worked in that program. And then I went to Ikigai, was the first employee there with Travis, so helped stand up the liquid strategy. That was a really good experience. I spent, I don't know, like thousands and thousands of hours putting together a spreadsheet of like the top 200 assets by market cap, trying to come up with a fundamental case, doing a lot of kind of quantitative work to score all of these things. Ended up realizing most of them were scams. And then I left Ikigai and went to Grayscale, where I led research. Kind of was like the crypto guy at Grayscale. It was still a very small team, even though by the time I left, we were managing 60 billion. And so I, like, during my time at Grayscale, I got the itch to get back on the actively managed side, right? Like in 2018, I got really interested in fundamental due diligence, was underwriting all of these different tokens. That sort of went out the window through the bear market, and everyone just started trading Bitcoin. I don't know if you remember, like 2018, 2019, everyone was basically like a Bitcoin maxi. And like, if you were really into ETH, like that was pretty contrarian at the time. Which is why in 2020 and 2021 cycle, the people who were really like big into ETH end up outperforming so drastically. I think we've kind of had a reversal of that in this cycle. But so throughout my time at Grayscale, that ability to do that fundamental underwriting kind of came back, because you saw the rise of DeFi, you saw NFTs, there was an explosion of applications. And so, yeah, I got really interested in getting back on the actively managed side, started to poke around and what that would look like. Ended up meeting my co-founders just through Twitter. They were at JP Morgan, reached out on Twitter, and got to know them. Really good guys, different skill sets than me, which, maybe we'll get into, but that was really important in starting the firm.
Very cool. That's awesome. Okay. So yeah, I mean, you brought up the, different skill sets. Could you talk a little bit about your co-founders and what skill sets they have versus what you kind of focus on?
Yeah. So I'm CIO. I basically only focus on the investment side of the business. My two co-founders are CEO and COO. So one focuses more on strategy and business development, which has been hugely important. I'm not really a sales guy, so going out and raising money is integral, right, to having an investment management business. And then also there's an enormous amount of operational stuff that goes on within funds, setting up the bank accounts, like dealing with a lot of lawyers and fund administrators and audits. It's a ton. And so I think if you, it's something that I don't think a lot of people realize when they first get into kind of like the hedge fund business, even more so than venture. There's just a lot of operational overhead. And so having distinct responsibilities within our firm has really helped us. We launched November 2021. So like we dove right into the bear market. And so I think if we didn't have these distinct responsibilities and, separation of responsibilities, we would have been at each other's necks, more than we were. So it's helped us to have longevity, I think.
That's great. All right. So how would you define your overall investment strategy?
Fundamental oriented. The way that we think about underwriting assets is sort of from the perspective of attention, right? So I think capital and attention follow very closely. And so I could think about like the last couple of years in specific, in like the fall, for instance, nobody was paying attention to AI agents, right? And then Truth Terminal came out, and then Go was launched. That went crazy, and everybody was scrambling to figure out, how can I invest in this sector, in this idea of AI agents. There were a bunch of different plays. We were very early to things like virtuals, and the reason I thought it was such a clear investment at the time was because nobody was paying attention to it, but I knew that tons of agents were about to launch tokens, and it would be this perfect marriage of like left curve and right curve, and soon it would just be like all anyone could talk about. And then you fast forward 3 months, that's all everyone's talking about. Attention is totally saturated, and if attention's saturated, then capital is probably also saturated. And so that serves as a signal to maybe de-risk a little bit when it's all anybody's talking about, because it's hard to find that marginal buyer. And it's the same on the kind of bear market side. When no one's talking about something or everyone's really negative about it, then it's a little harder to find that marginal seller. So that's really where I think our edge lies, is in kind of finding the emerging narratives. And fundamentals are part of that, right? Like long-term fundamentals can be part of that story and help you underwrite something over a multi-year time frame. But that story can also help you underwrite something for a 3 to 6 month time frame.
And why has attention played such a prominent role in, crypto, of course, because, some of these are securities, some of them are not securities, and, they're kind of formulated in a way where, you don't want to be a security. So you're kind of, cryptos, you can't be just, hey, we're sending cash flow back to token holders. And so a lot of these have to kind of make weird structures. So they are not traditional assets, and, a lot of them trade based off attention. But even like TradFi, look at GameStop or like Palantir, for example. Palantir, might be an unfair one, but their valuation compared to their revenue or compared to the profit just seems like kind of out of whack. But why has attention become such a prominent driver of flows over the course of, I don't know, we'll call it like since like COVID, I would say? It's just everyone like perpetually online, and people just ape into like whatever they see and whatever like the narrative is, or why do you think that like that's happening?
Yeah, I definitely think that everyone being terminally online is a big part of why attention works as an investment strategy. But also our focus on attention is kind of a way to reduce, like everyone has different ways of fundamentally underwriting something, right? Like you can do a discounted cash flow, you can underwrite over multiple year time frame, maybe over multiple decades. You could take like a Warren Buffett type of approach, or you can have, much more of like a meme trading approach. But I honestly think it all boils down to the story and how attention kind of accrues to that story. And I was listening to like Bill Ackman talk on some podcast, and he was like, we're really just fundamentally focused. We only focus on cash flows. And then he kept on going, and he's like, it all feeds into the story. And it like, I felt like that was a slip up on his part, because really what he was saying is that cash flows were just part of the broader story. And I think that's generally true. Every investment has its own story, and why someone might underwrite it. And cash flows might be part of it. It might just be a momentum story. And it might be a growth story. And so like, it's being in crypto, I think we have to be really flexible with how we want to underwrite these things. And so that's the reason that when boiling it all down, it's like, what are we actually investing in? And I think it is this accrual of attention, whether you're accruing it over multiple years or multiple weeks or multiple months.
Yeah. So it makes me think about Anduril. Anduril, the is a defense tech company, and traditionally, like Lockheed Martin and whatever, like they're cool companies because they make fighter jets and whatever, but no one online has really been like, oh my God, I love Lockheed Martin, or, it hasn't been like a thing. And Anduril, when they release like a new missile or a new drone or whatever, they're releasing like a cool anime or like a real like short form clip of like this amazing technology, and they're building up hype for it. And is that just like kind of like how you imagine assets will evolve going forward, where like they have to provide almost like entertainment value in addition to the, you mentioned cash flows was part of the story. So yes, they have to make money, but also it's really helpful to craft a cool, compelling narrative to help sell that vision to investors broadly.
I definitely think it helps, right? I think this is the reason it's transformed from just like underwriting cash flows to underwriting growth is because we've seen such intense growth in the tech sector, and then that's got even crazier with crypto. You can't, if you're waiting to underwrite just cash flows, you're probably gonna, or like profit, you're probably gonna miss most of the trade. And so underwriting growth and that growth story is where a lot of the juice comes from. You're also going to experience probably higher volatility because that story is a little bit more fragile than seeing the stable cash flows. But I definitely think you want to be able to sell, and you want to sell the dream, right? And if we think about the best investments in crypto, a lot of them have been L1s, and it's like, why have L1s always been so successful? It's because they have no ceiling. No one knows how to value them. Like, there's this monetary premium aspect, but there's also like, oh, they do a lot of fees. But if you were to value them based on a discounted cash flow, the valuations would drop by an order or two of magnitude.
Right. Like ETH right now is not looking too hot from like a company standpoint, like revenue generation standpoint, but it's still worth what, 300 billion or something like that. Like something crazy. Yeah. So in your opinion, what can projects and protocols do in order to attract the right kind of attention? Not just be like totally like bombarded with KOLs and this is the coolest new thing ever. But I don't know, what would be conducive to help accrue value if I'm a token or a project that's trying to attract the right kinds of folks, but also still build like a quality product and business, but still like try to go for that attention as well.
Well, yeah, it's interesting. In the last 6 months, I think this story has really gotten a lot of attention. Of the administration is changing, regulation will change. Now, token holders can actually have a share of the revenue, and so we hear a lot. Oh, like there are a lot of projects that actually have revenue. It's like, okay, but that's not a compelling story. Saying actually have revenue, like all businesses actually have revenue. All successful businesses actually have revenue. That doesn't mean that the investment should be worth, billions or tens of billions of dollars. From my perspective, to grow, we need to bring in more users. So, there are some projects that we're invested in, both private side and public, that are really focused not on crypto users, but they're focused on the broader, user bases outside of crypto, which ultimately I think we need to attack. So like I think DeFi will continue to see growth there, and you can kind of like, I like to think of investing along the Gartner hype cycle, right? So like you have the innovation trigger, things go crazy, and expectations really exceed reality, and then you have that kind of trough of disillusionment, and then the slope of enlightenment. And DeFi is definitely on that kind of slope of enlightenment. It's not really sexy right now. People aren't talking about it. It's not going to accrue all the attention in the short term, but over the next decade, you can see DeFi just continue to grow and grow and grow as stablecoins come into the ecosystem, as Bitcoin grows as a larger share of the global economy. It's a no-brainer that DeFi is going to just get larger and larger, and I think those underlying investments will do really well. But people are looking for, these things need to go up 5 to 10x like tomorrow, which I just don't think is going to happen. And just having different token economics isn't going to do that. So I'm not too worried about where things are headed, and I think the having better like token economics is a good step, but it's ultimately about growth, and I think we're on the right trajectory.
And you mentioned part of your edge is being able to identify early on the products and protocols and tokens that will accrue attention. And you mentioned like virtuals and these projects that you were very early on to. How are you able to identify these upcoming trends or these different tokens or products that will garner tons of attention?
Yeah, I'm not really sure how to, like, I think it's just experience and being on Twitter and talking with people and just every week trying to figure out, like, okay, what are people not really paying attention to? What are some interesting trends that could be a trigger? Um, like, the same thing happened in 2023. ChatGPT came out and it's like, okay, well, this is the fastest growing product of all time. How does crypto overlap with it? And then backing into, okay, well, crypto is all about capital coordination. There are all these networks that do kind of GPU provisioning. That's kind of interesting. Then I found BitTensor. BitTensor, we were the first fund to ever write a report on BitTensor. I think it was in the fall of 2023. No one was paying attention to it at the time, and it had this really grand vision, right, where you could set up all of these different subnetworks, and all of the different subnetworks could specialize in something. And that dream, that vision, was really compelling. It was also a fair launch, and at that time, everyone was talking about fair launches and how that was the right way to go about things. And so it's just kind of like trying to be optimistic and use your imagination and figure out where people are going to get excited.
So when you're assessing a potential investment, are you looking at factors like, on-chain metrics and active wallets and, volume of XYZ or fees or whatever? Or is it more so a sentiment gauge and trying to kind of collect that, just like the unofficial user data to be like, hey, does this have legs from a narrative standpoint? And does this have legs from enough people are excited about the concepts here? But I'm going to tell them that, hey, you're excited about AI, BitTensor is the next big thing. Or like, what factors are you looking at when you're assessing a specific investment?
Yeah, the on-chain metrics and are definitely a factor, right? So like with virtuals, for instance, they were doing a ton of revenue in like November and December because everyone was minting these AI agents with tokens attached to them. So I think their like annual revenue, if you just were extending it, it was like $300 million at that run rate. So it's like, okay, that makes like a really good investment. And it was interesting because you knew that a lot of fundamental type investors were going to come into that because they were now comfortable underwriting it, right? And it's like, okay, well, this looks really good right now. And you have to understand that a lot of people are going to flow in because of this revenue, this revenue increase, but it is highly reflexive. And so then when you started to see those revenue numbers decrease, it was like, okay, well, a lot of funds definitely came in to this investment specifically because of this revenue, and now the revenue is collapsing. All those funds are probably going to have to get out of that investment as well. I also think it depends on like what stage you're investing in these assets. Even though these are all public market assets, liquid tokens, you can think of them, as being seed or Series A or Series B type investments, right? And like with BitTensor, for instance, when we first made an investment in it, it was a seed stage. We thought of it as like a seed stage type business because it really didn't have any adoption metrics to speak of. It was really just a dream, and like the dream made a whole lot of sense. 6 months later, it was now valued 15x what it was before, and so at a $5 billion valuation, you now have to see some adoption come in, right? Like there have to be some sort of metrics to support that new valuation. So I think it just generally depends on like where are we investing in the stack, and if it's a new protocol, then we don't necessarily need to see any metrics. But if it's in the billions of dollars, then we need to see some sort of metrics that support that new valuation.
And when you're thinking about just your overall portfolio, are you trying to run a very concentrated book of assets where it's, I don't know, we'll call it like 5 to 7? Or are you like, no, we have our core portfolio over here of our main assets, and we have these smaller positions. We have 20 smaller positions over here? Or how are you looking at the overall, your overall portfolio?
It's transformed over time, right? Like sometimes, like I think having 15 to 30 has been the sweet spot, but honestly, I think that it's better to be concentrated. When you find something that you really love, hammer it and allow that to be your winner. I think the mistake that can often happen is that you find an investment in a sector that's really great, and then you invest in a laggard just for that sector beta, and you don't actually have a lot of conviction in that laggard. And then the market might turn around on you, and now you're invested in this laggard. You don't really have conviction in it. Why are you holding it? You're waiting for a bounce, and now you have too many assets in the portfolio, so you can't actually keep track of everything. So I think, especially in crypto where correlations are so tight, you don't get some added safety from diversification. It's actually better to have a concentrated portfolio where you can watch everything very closely, and when like that fundamental thesis changes.
When you're thinking about like hold periods, are you going into investment because you're also talking about them from kind of an early stage investor lens, seed A, B, a series B kind of style? Are you thinking about, hey, I'm looking at this asset, this token for the next 12 months? I'm looking at it for the next week, or is it like 5 years? Like what is in your mind? What is the ideal hold period for these different investments that you're entering in?
Ideally, like 6 to 12 months is sort of the sweet spot. But sometimes you make an investment and it happens faster, or it never happens at all. And so that's ideal, the 6 to 12 month period. But frequently it happens way faster. Like with AI agent stuff, like we had a long-term thesis on that, and then the whole market went nuts in 2 months, and the underwriting changes when things go crazy like that.
And also, speaking of that, like how do you know when to exit? Because after like a 3x, you're probably like, oh my gosh, like our thesis played out perfectly, but then you sell and maybe it goes up 10 more X or whatever, right? So I guess within crypto, I think exit is so important. How do you account for that?
I think trend following is the best way to allow you to get as much of to allow your investments to compound, but also have kind of an objective way to cut your losses at some point, right? And so the way that trend following typically works out is if you're just throwing darts and using a trend following strategy, you're typically going to have under 50% win rate with trend following, but the wins that you have are going to be multiples of your losses. And so that's how the math sort of works out. And I think that works really well for crypto as an asset class. So you can do just shaving a little bit as the asset goes up. You also need to fundamentally re-underwrite it at the new valuation. But as we know, things go way higher and way lower than we think in crypto. And that's why trend following, I think, works really well, because you don't have to say, oh, I'm going to get out at 2. You just if the momentum is there, let it ride. And then you won't sell the top, but you also won't round trip your positions.
How are you thinking about, the liquidity and slippage of these different assets? Because especially if you're going into something that is not talked about a lot, there's little to no attention on a certain asset or a certain token, and you're trying to build a sizable position. How are you able to accomplish that? Considering liquidity and when you're selling or buying, like the slippage.
Yeah, I mean, I think that's a really good follow-up question to the trend following, because if your size is too big, you cannot actually do trend following properly, because you need to be selling enough on the way up to so when the trend reverses and liquidity dries up, you're not stuck with a massive position. So it's important to make sure that as the investment scales up, it's not becoming too large a percentage of your portfolio, and that when the trend following indicators that you use reverse, you can still actually manage your position. So there are liquidity aspects that has to be taken into account. And again, like that fundamental underwriting. So I think what we do is we take kind of both a bottoms up and top down approach, using a lot of different indicators for that top down approach to understand where we are in kind of a 6 to 12 month cycle. Are things overheated or not? Are trends up or down? That's like the top down stuff that really keeps us level headed and it's basically a risk management system. And then the bottoms up analysis is just re-underwriting every position in your portfolio, making sure that you're still excited about it at every new price level.
If you had to choose, let's call it 3 quantitative metrics. So, some, whether it be like on-chain, some specific on-chain data, or, I don't know, fees or whatever. What were in your opinion, what are the 3 most important quantitative metrics that when looking at a specific investment?
I think it differs if we're talking about like more like technical metrics. Like I love looking at like open interest and like derivatives, because it gives us an idea of positioning. Like open interest, skew, funding rate, basis. Those are all super helpful, and you can put them together in a way that aggregates kind of where we are in a given like mini regime, right? And so sometimes open interest will spike like crazy, and you can look at this on a week by week basis or a month by month basis and change the way that these metrics are sensitive to periods, depending on like what your goal is. But yeah, so from a technical perspective, I like looking at derivatives. As far as like on-chain metrics, there's nothing specifically that I'm always looking at. It's just more of like, how is this contributing to the overall story?
Okay, so yeah, speaking of the story again, like do fundamentals matter in crypto? I feel like people go back and forth in this. Some people say absolutely they do, and some people say no. Some people say like, what are fundamentals? Like within crypto. So in your opinion, like do fundamentals matter?
Yeah, I definitely do think they matter. It just depends like what the fundamental story is, and like fundamentals, like it might be cash flows and underwriting like some sort of like price to sales ratio. I think that all can definitely work. I also think just like looking at user growth makes a lot of sense, right? Because like these are ultimately really early stage investments. And so I don't think you necessarily even need to underwrite cash flows or revenue right now. I think it makes a lot of sense to underwrite just user growth. So I do think fundamentals matter. Like they matter in the short term for story development, but they matter even more for a sustainable trend.
Interesting. Yeah. No, it's like, yeah, because it's like we're talking story, but the story is supported with fundamentals. So it all adds up to create a compelling narrative of why a specific asset is good or bad.
Yes.
Can you walk me through like just an example of like, okay, I have found a new token that I like. Like, tell me how you found that token, and then once you found the token, how have you how like what kind of research have you done? So okay, we've now, or how do you build that story, and then how do you make the investment, and then how do you exit? So I guess like we'll talk about like identification, research, investment, and then exit.
I think Virtuals is a good example. The founders of Virtual had reached out over Twitter. We had a couple meetings. We were trying to underwrite the investment thesis. Obviously just looking at like who's actually involved in Virtuals, who follows them on Twitter. Like that's the very first step, right? Like I see a lot of stuff where I'll find it on Twitter. The absolute first thing is like who that I know is also following this account. Are they like buying a bunch of fake followers or anything like that? Then I go to CoinGecko, just try to understand the valuation. Do they have a lot of unlocks or anything like that? Go to Dune Analytics, see what on-chain metrics look like. What's their user base? Do they have any kind of revenues? Try to understand what the product is, like where are they trying to go? Is there going to be any catalyst in the future? With Virtual specifically, I'd been speaking with the team, so I kind of understood what they were trying to do, where they were trying to go with the product. What I was missing was sort of like a catalyst for why people would care. And then Goat came out with, Truth Terminal, and it was a spark that kind of ignited the interest in the whole sector. And as soon as that I saw that, it became clear why virtuals was going to be a good investment. The other one, like BitTensor, was kind of unique in that on Twitter, I was just scouring Twitter, saw someone put out like 20 tickers, and I don't even know who the account was, right? But sometimes I do just go through all of these tickers to see if anything is real. 19 of them were basically quasi scams, and then I came to BitTensor, and I went to the BitTensor Twitter, saw some other people that I know following them. I was like, oh, this is sort of interesting. Saw that they were fair launch, and just started to understand the whole story of what they were trying to do. So yeah, it's kind of messy in how I form an investment thesis and how I find these things in the early days. But yeah, Twitter's a lot of what I use.
Yeah, I want to dig more into like the followers and kind of like sourcing by being terminally online. But I guess for the investment and the exit, are you setting up like, okay, we're going to invest at a cent, and we have an exit price target of like 5 cents, or is it just like, no, it's mostly based off, as you mentioned, like the flows and current the current vibe and the saturation of the conversation and whatnot.
Yeah, I will look at underwriting to a certain multiple. Like, okay, I think if things go right here, we could see a 10x or a 15x. And if that happens faster, then we have to re-underwrite and think, okay, this happened like in 2 months. Like, should we continue to hold this asset, or should we move on to the next play?
And then, but relating to the followers, you were like, if are they buying their followers? Is this group buying their followers? And does anyone I know follow them? Is it a positive signal if there's a lot of people that are following them, but then their price action is still kind of muted? Is that a good signal, or do you want to see like, oh, there's only a few of my smartest friends are following them, and the price action is still muted? That's great.
Yeah, I think it's better when it's like a handful of people, but it's a handful of smart people. And you also, I think it's a pretty bad signal when there are like 500,000 followers on the account, and then it's like 5 people that are following them. Just inorganic. And yeah, so it's definitely like in the early days of finding like these AI agents, you would find a new AI agent, and maybe one other person that you knew was following them, and they had like 1,000 followers total. Like, oh, this might be a good one. And like that one other person that's following is like someone that you respect a lot. And then this is only like the very, very first, part of the due diligence process, right? To filter out all of the garbage that exists in crypto. So it's just a way to sort through a lot of stuff quickly.
Totally. Yeah. And also like, the sourcing aspect of like just being terminally online and being in the know and talking to folks. Where have you experienced your, I guess, best alpha, in the sense of like Twitter DMs, talking one-on-one with investors you like, or talking to founders that ping you and you ping them, or because you just found it randomly on Twitter, or I don't know, Discord channels or Telegram channels, or where are you identifying some of your best investments?
I think just scouring Twitter, like a lot of the time, by the time people are in Telegram chats, you're a little bit more controlled about what you're saying to the group, or like, yeah, I feel like some of the stuff that happens in Telegram chats is a little bit late. But if you find the right followers on Twitter, people who are like maybe have up and coming accounts and are really hungry, and you're following those accounts, it's amazing how much alpha is generated through those channels, right? Where 20 years ago, you might need a full team of analysts, doing all this work. And now you have outsourced analysts, feeding you stuff on a daily basis. And a lot of it might be garbage, but you have to sort through it and find the stuff that makes sense. So honestly, it just, I wish I had, some really secret sauce, but it's just scouring Twitter and discerning who has had some good calls and try to sort through some of those calls.
What role do token economics play within your process? Because maybe you're like thinking, okay, I found a stellar project, a stellar protocol, great team, but the token economics are just totally messed up, and like we can't do it because of that. Or I don't know. What is your view on tokenomics?
Yeah, I think it's a huge factor. It makes a big difference if there are a ton of unlocks, or in some cases, inflation can be very good in the early days because it attracts a lot of attention. Like BitTensor in the early days, super high inflation, but it was still a relatively unknown protocol. And so if you held Tau, you could stake the Tau, get 20% APY. And so that was really attractive because everyone's like, oh, okay, well, first Tau is going up, and then you can stake Tau. And so it's like compounding an already great investment. But then when something goes up an insane amount and the inflation is super high, now people are making way too much money for doing absolutely nothing. And that's going to be a big weight on the success of the whole ecosystem. So inflation can work both ways. I also think that it's like the unlock situation. It's hard to navigate because you don't know how much has been accounted for on the secondary market. And like, even though unlocks might be coming up, I mean, Solana's like the poster child of this, where, what was it, January of 2021, they had that massive unlock and everyone's like, oh, this is going to dump. But, lo and behold, Multicoin, a few others had purchased all of the SOL before it was unlocked, and they weren't going to be selling it. And so the unlock stuff is a little bit difficult to navigate, but it still adds a risk to the whole system.
What are your thoughts on on-chain governance and DAOs? Because I feel like we had really high hopes early on, or I had really high hopes early on that DAOs and on-chain governance were going to play a huge role in kind of how these protocols were governed, and they do have a major impact. But I feel like a lot of them, not all of them, but a good amount of them are kind of swayed by specific folks and like taken over almost. So I don't know. Do you play in that world, or do you get involved there?
No, not really. Like we don't take an activist role. I feel like most of these protocols are just governed by a small group of people, close to the founding team. There are definitely some success stories of being, an activist investor coming in and changing the token economics, and maybe reducing inflation so that like the token will do really well. We don't really participate too much in the token or in the governance stuff.
What do you think about the meme where on X everyone's saying like there's not enough liquid managers, we need more liquid? Is that true, or is that just something people are saying because tokens are down?
Yeah, I mean, I do think it is true. If you look at the traditional world, the amount of money in traditional managers, traditional hedge fund managers, far eclipses like venture. But then if you look at crypto, that whole paradigm is flipped. And I think a big part of that is due to how allocators underwrite managers. And a lot of the institutional allocators have venture teams that underwrite venture managers, and they have hedge fund teams that underwrite hedge funds. And so when they look at a crypto hedge fund, like a liquid fund, the hedge fund team looks at the liquid fund and they're like, this volatility is absurd. We can never add one of these liquid hedge funds to our bucket, right? To our allocation bucket. The venture team looks at one of these liquid hedge funds and they're like, well, we don't know how to underwrite a liquid hedge fund in the crypto space, right? Like we don't know what to look at. And so I think what ends up happening is a lot of people just launch these closed end funds that can actually invest in liquid as well. And then the venture due diligence team for the allocators can actually more easily underwrite that closed end fund. And that's why you've seen, way more capital go into venture than has gone into liquid. Obviously, I think if more liquid funds were launched, it would definitely support token prices, but I don't think it's like, I think it's a little bit of a cop out to say that like we just need more liquid token funds.
Yeah, right. Because liquid token investors are not just going to buy every single altcoin that's down. They're going to buy only the quality assets. So
Well, and there's so many tokens now, right? Like it's
totally. What do you think about? I know you've been early to AI and crypto, and I guess when virtuals came out, I thought it was interesting. But my thought process was like, okay, this is kind of like reskin meme coins. It's like meme coins with much deeper meaning, but still like not necessarily a functional use necessarily. And that's like not all the cases, but that's kind of my overarching thesis on virtual specifically. What are your thoughts on AI crypto as like a broad category? Because I know you said BitTensor, and they seem to be doing some pretty interesting stuff.
As a broad category, I think it's like the most interesting space to be investing in. Crypto is all about capital coordination again, and so like, you know, Bitcoin was a poster child of capital coordination, of like bringing a bunch of capital and resources together and creating like the hardest money. DeFi, again, coordinating a lot of capital around financial services using smart contracts. Now we have it with DePIN and AI, and so the same sort of model of, you know, how Bitcoin was created, coordinating a lot of capital and resources to fulfill a specific use case. And I think what we're really excited about right now is kind of like this next generation of AI protocols. In 2023, we had like kind of the first round. It was that Gartner hype cycle spike in expectations relative to reality. And now we're seeing protocols launch that I think are going to have much more lasting value, and they're going to work really well. So the primary benefit of these is just bringing down CapEx. You know, CapEx is massive in the like traditional AI world. People are spending an absurd amount of money right now on training, but it's going to be, I think the bigger area is going to probably be on inference down the line. And so figuring out a way to democratize access to training at scale and democratize access to inference at scale while also bringing down those costs dramatically, I think is going to be a big deal for how crypto and AI converge.
Very cool. Very cool. All right. I want to kind of switch it up here. If you had to hold ETH or SOL for the next 12 months only ETH or only SOL, which one are you choosing?
SOL.
All right. So this follow-up question, is there any hope for ETH? Is ETH just toast?
You know, I think the only hope for it is really just from a positioning standpoint. And so I could see a good trade on the table, like for ETH, but I don't have a super strong fundamental case to make for ETH. And yeah, like when I look at this, the last 2 years, like this bull market, basically distinct from like like what happened in 2020. In 2020, everyone was positioned in Bitcoin and they were under positioned in ETH. And so what happened? ETH outperformed Bitcoin drastically because like there were so many like marginal buyers available. In 2022 and 2023, everyone was so overpositioned in ETH, it was absurd, right? Like the common narrative was just buy ETH and stake it and you can easily outperform the market. It's amazing how easy it'll be. And that's what everybody said. And the common narrative was, well, in a bull market, ETH will outperform Bitcoin because it's like, you know, an alt, and ultimately ETH is probably going to overtake Bitcoin. So people were way overpositioned in ETH. Bitcoin started to outperform, and I think we've just seen that positioning totally unwind. So now we're maybe on the other side of the pendulum where positioning is a little bit underweight ETH, given that it still is the second largest asset. And so I could see like a little bit of a mean reversion move here on ETH, but I'm not really betting on it. And I think from all the fundamental perspectives, like SOL is really eating ETH's lunch.
But talking about story, you know, let's go to, I forget the amount of stable coins that are issued on ETH compared to SOL, but isn't that a really compelling part of the story where, the majority of institutional players or stablecoin players are issuing their stables on ETH, and the stables are like the hot thing of 25, and I'd say 24 as well.
Yeah, I think there's a little bit of a Lindy effect with ETH right now, but there was also the same argument could be said about like Solana in 2023. Everyone's like, oh, there's no volume over there. There are no applications building over there. It's like, okay, but if you just use Solana, you'll realize how much better it is than using mainnet ETH. And ultimately what happened was a lot of volume, a lot of liquidity, a lot of applications started migrating over to Solana from ETH or from the L2s. So, I mean, I think there's a case for L2s to be successful in some degree, but using the L2s and like bridging it's really an atrocious experience.
That's true. Sadly, it's true. All right. So do you think that with the new administration coming in and providing some regulatory clarity there, are we going to see tokens turn into securities that just send cash flows back to token holders? Or I guess, how do you see the evolution of the token market going forward with a more friendly regulatory environment?
Yeah, I think there will be a much clearer connection between the token and the revenues generated. Whether those revenues are flow directly to the token holders or whether they flow to a treasury and token holders have some claim on the treasury, which you can already see is starting to happen with some protocols. Yeah, so I definitely think that there's going to be a closer connection. And it could be good and bad, right? Because some tokens I think are trading on like kind of a floating, like almost a meme narrative. But if you then connect the token very closely with cash flows and the cash flows are not sufficient to support token price, that's actually not going to be a good narrative.
So yeah, do you think there's going to be, so I agree with you that it could be bad in the sense that valuations could come down because people are like, listen, like it's trading 100 times their revenue or whatever. But like, do you think that there'll be some sort of premium because they're, I don't know, a crypto token, crypto project, and people say, sure, it's trading 100 times revenue, but it's accessible to everyone in the world, and because it's on crypto rails, or like, could you see a narrative like that forming, or you think it's like, no, it's going to trade somewhere close to whatever the norm is in TradFi?
I think there could be a premium for some of these things if like they fit into like an index fund of some sort, where it's like, oh, like we're gonna like an ETF is just trading DeFi stuff or things that just have revenue, and so you start seeing passive flows into all the DeFi tokens, especially if like they have really good token rights. I can see that. Yeah.
How are you thinking about investing in this market where, one individual can like tweet and like the whole world economy shifts by trillions of dollars? Has that been, I mean, that's probably have been pretty crazy and stressful, but how are you thinking about it over the next, 12 months, let's say?
It's exhausting. Like since Trump has come into office, it's absolutely exhausting to keep up with everything that's going on. Yeah, taking a lot of walks and like getting away from the screens, I think is important, and making sure that you're trading over like at least like a multiple week type time frame, because on the shorter term moves, it's just nauseating. I mean, what was it? Monday we're down 10% S&P, and then we had a 13% move back up in like NASDAQ on Wednesday. Yeah, so it's a lot to navigate. I think you just have to be confident over a longer term time period. I don't know how things are going to shake out specifically over the next like 12 months. From an investing perspective, the rhetoric that Besson has kind of been putting forth of like it's Main Street's turn, not Wall Street, is obviously like not ideal, right? Because I think you have to take the Trump administration at their word. So far, they've basically done what they said that they're going to do. And so I think a little bit of caution is warranted there. Bitcoin might be in a really good place though, because I think we might be seeing an exodus from U.S. assets, and that gold is obviously doing really, really well, especially over in the last 3 or 4 months. Bitcoin could definitely catch a little of that narrative, I think, and start outperforming U.S. equities. And if it starts outperforming U.S. equities, people are very momentum driven, and there could be an increased flow both from U.S. equities, but also from the capital that's already left and gone to Europe, European, equities. So I think Bitcoin is in a actually potentially really good spot. I mean, the dislocations we're seeing right now, like with dollar down, but yield skyrocketing over the last few days, there's something weird going on. And at some point we might need to see some sort of intervention. I always think that the most bearish case is also the most bullish ultimately, because if things get bad enough, you have some sort of stimulus to come in, and that's really good for the riskiest asset class on earth, which is crypto.
Yeah, it feels like the story of the past couple of years, especially since COVID, has been like, the power and influence that governments and central banks have over assets. And the story has been like, okay, I want assets that are neutral. I don't want to be involved with China's spat with America. Like, I don't care. I'm trying to make money, trying to build my business. And yeah, Bitcoin and gold, have been doing pretty well. So maybe that will continue. What are you most excited about in crypto over the next, we'll call it 12 months?
The 2.0 AI and crypto crossover is definitely where we're concentrated. Some of the protocols aren't out yet, and we're starting to do some mining in some of these early protocols. And yeah, I think that's where we have an edge. People aren't really paying attention to those things. I think a lot of people are just like, oh yeah, crypto and AI, like that stuff's dead. Everyone got burnt on the agent narrative. But yeah, this kind of next coming of the AI protocols is where we're focused.
Very cool. All right, Phil, it is time for the closing questions. All right. So what is the best piece of advice you've ever received?
Best piece of advice I've ever received. I'm not sure. This is one that's just top of mind right now. The movie Blow, with Johnny Depp. And I think his dad had just left the bank, like they were trying to get a loan, and Johnny Depp's dad is like, are we going to be poor? And his dad's like, listen to me, money's not real. Nothing's ever as good or as bad as it seems. And I think that's really important when you're in crypto, where things go up, hundreds of percent, and then they go down, 50, 60, 70%. Keeping a even keel it's so important for longevity and so important for survival, which is ultimately the most important thing in crypto. Like, you just need to survive. You need to continue to hang around the hoop and then wait for a good opportunity.
That's great. All right, so you could go back in time and give yourself one piece of advice before launching your firm. What would that one piece of advice be?
Don't trade in 2022.
2022. Why you say that? What was the main event there that caused you to say that? I mean, I know that there were a few, but what was the primary?
When you first launch a firm and you're really excited, right? And so you come out of the gates, you want to take a bunch of swings. 2022 was not really the year to take any swings. And so I think just being patient and sitting there waiting for the right opportunity would relieve a lot of stress. And just put the game, investing is a lot about rhythm and being on the right foot at the right time. And so if you should be defensive, be defensive. Should be offensive, be offensive. But if you are offensive when you should be defensive, then you're going to have to be a little bit more defensive when you should be offensive. And so it's about finding that rhythm. So launching and just not caring about coming out of the gate quickly.
Love that. All right. What trends or opportunities will define the future of investing over the next 10 years?
I mean, I think the easy answer is just AI and agents. one thing that I think will probably happen is we'll have a marketplace of agents that do different types of investing really well. And you can take all those types of investing, all those specific agents, and combine them into a compelling strategy. People talk about like, oh, well, if an agent can do X, Y, or Z and do really well, then why would anyone share it? The way that I look at agents is I look at them as workers, and then people can take those agents, those individual workers, put them together to create a compelling business. It's just like, yeah. Just because someone's like the best salesperson ever doesn't mean like they're going to be able to start the best company, or just because someone's like the best developer ever doesn't mean that they're going to be able to start the best company. It's like that entrepreneur that comes along, takes all those individual actors and has a great idea and puts those workers in the right place to do something. And so I think the same thing will happen with investing and trading. Is we'll have these agents which individually like don't do anything all that amazing, but we'll have people using those agents to create compelling strategies.
Very cool. That's awesome. All right. Last one. How do you define success, and do you feel like you've achieved it?
Success, I think for me is really just feeling good about how I've attacked a certain opportunity set. And so it's an evolving thing. I've definitely achieved some successful periods, but I want to continue to succeed in like tackling that opportunity set. And so, it's really just about like outperforming the market. And there are in outperforming the market, you're also going to have periods of underperformance. Like it's just by definition, if you're gonna stick your neck out, you're going to sometimes underperform and sometimes outperform. And so, I think we've achieved a lot of successful periods, but I wouldn't say that like we've just achieved success. So I'm looking forward to just like, the next opportunity set.
Awesome. Phil, thank you so much for coming on. I appreciate it. Where can people find more about yourself and learn more about Plaintext?
Plaintextcapital.com and Twitter, Phil J. Bonello. Pretty simple.
Amazing. Thank you, sir.
Yeah, thanks, Andrew.